Just 8 months ago was the Bitcoin bottom, the cycle bottom hitting 15,500. And since that time, Bitcoin has been up over 100%. So this is leaving many antsy, hoping for bigger, higher, faster prices. But this typical pattern that is playing out on Bitcoin right now is something that has occurred in the traditional markets this year. And it caught over 90% of people by surprise. They were sitting on the sidelines, hoping and waiting for further downside, and it didn't come. I want to show you in today's video what we can anticipate and basically what this pattern is and why it keeps happening over and over again, and why it keeps fooling the majority of people. We know that over 90% of people lose money in the markets, and this is typically why. Make sure you hit that like and subscribe button. This is your home of macro cycle analysis, where we cover crypto, Bitcoin, and the traditional markets along with the real estate cycle. All right, it's been a few days since I've put up a video. I've been pretty unwell here in Bali, so thanks for bearing with me. This is basically the last video here, looking at the most wanted correction. And within this video, I was looking at the percentages of corrections that the markets can expect, especially after such big moves. So I want to use that as an understanding and some analysis as to, I guess, potentially what we could expect moving forward for Bitcoin. So let's have a look at the S&P and the NASDAQ since that time. Remember, this video I put up was about 6 days ago, probably coming up to about 7 days ago now. And the main thing that has basically circulated across the media is that everyone is waiting for a very, very significant pullback. And in that video, I demonstrated that over the course of history, decades and decades and decades, that these significant pullbacks, something probably in the percentage of double digits, 10 to 20%, or taking the price back to previous levels, say these lows that everyone is waiting for, or the cycle lows, it's almost impossible, meaning that's what the data has shown. It's in some cases, it never has happened. And so what does happen though is small pullbacks. So people are wanting a major pullback, but each of these pullbacks is single digits. And we looked at the most possible highest single digit being about 9%, or let's go to 9.9%, and that would still only take us back to the previous top. So looking at the top, back down here to 9.9, that basically takes us all the way back to the previous tops, which would then become support again. And so just looking at history, these pullbacks, in this case, this is almost impossible to happen just based on the data. And so if we wait on the sidelines for this, what happens is what has happened in the past on the stock market. So if we can use the mistakes of the majority of traders, you remember all of the pro traders and investors and media and the hedge fund managers and everyone we heard on Twitter and YouTube saying that the market had to collapse here. The market had to collapse here. And from that point, these pullbacks were either equal or got smaller and smaller before they broke out. And so that's what I want to look at for Bitcoin today. You can see that every time we've had these levels, they're saying, well, the market has to collapse. We're going to get a new low. Never forget that, because that is going to help in the psychology as we move forward in this bull market. And so that top there, you can see at 25 grand, when we had the banking collapse, it was almost a sure thing by, if you listen to the bears, that this market had to collapse past the lows. But of course it didn't. And within a few days, it pumped to $31,000. And then the same thing happened again, except this time was a longer pullback. And then we had a nice big pump. This time, however, we're starting to find some significant resistance at around $31,500 to $32,000. And we have plenty of reasons for that we've covered on the channel here as well. So if you're not already, hit the like button. And about 70% of you are subscribed. So the other 3 in 10, just click that button. That'll be much easier to keep track of what's going on in these markets, as opposed to getting caught up in the 90% of everyone else who has the same opinion that the markets need to collapse. Same thing for Bitcoin, of course. And so as we start to get a converging price action here, we're getting these smaller moves and the market is just starting to get a little bit tired and a bit boring, that's the time when you need to pay the most attention. So I want to use this as an example again. It's the same thing. Doesn't matter if you're in Bitcoin or the stock markets or whatever. It's the same psychology when it comes to people, when it comes to investors. They do the same thing. They fuck up in every market over and over again. And that's how it's your edge to take what's on the table and just learn from their mistakes. Most people just don't learn from their mistakes, and majority of the time they get pissed off and they just leave the market. So they never end up learning. Then you get that new fresh generation of people that come in with more cash. The older generation that got screwed over, they come back in the peaks, and it's your time to take the money. That's been my experience for over 15 years now, whether it's been in real estate, whether it's been in stocks, and of course, Bitcoin and cryptos. People make the same mistakes over and over again. And I'm sure in your own daily lives, your own businesses or jobs, you see people make the same mistakes over and over again. And a lot of the time, they just don't want to learn from their mistakes and they wonder why things don't go their way. Luckily for us in trading and investing, we get a chart to look at and we can see how those mistakes are made. And it's this particular area that I'm most interested in because this was through April and May and going into June as well. If you remember from that period, all of the fears were around the debt ceiling. No one even gives an absolute flying F about that anymore. No one's even talking about the debt ceiling. But at that time, all the comment sections were about, you're not factoring in the debt ceiling. Once the US defaults, markets are collapsing. And of course, I hear this time and time again, and most of those people just leave. They don't come back to the videos and they keep going on with the next fearful thing and the next fearful thing. And so from that point, they just keep making the same mistake over and over again. I'm sure you've seen it by now. So that's the market psychology as to how this continues to happen over and over again. You can see the price patterns come together where these pullbacks are getting less and less because what the smart money is doing, what the smart money and the guys in the know, they are buying up these prices at higher and higher prices when you compare it to the past, compare it to the past, compare it to the past, compare it to the cycle low. They know that that's going to be the best price they're going to get for a very long time. And then once all the supply is taken up, meaning once everything has been bought up, everything they can buy up, you start to see the price just creep a little higher, a little higher. And then you get the pump. Then you get the next pump. Of course, we do have to have a correction. But remember what we've done as well. We've looked at how significant these corrections are going to be based on history, based on decades and decades of history here. And so we know that it's more than likely going to be single digits and more than likely going to be less than roughly 3 to 7-ish percent, typically less than that 5% as well. And so if you just take a look at that, then you can start to understand where those lows might come in. 3% only takes us back to the previous tops, which is a pretty good area for a support and resistance. You'd have the resistance here, support come in at 44, 4,500. Market takes its time, starts to build again, it starts to push higher. Meanwhile, everyone is hoping and expecting lower prices, which typically don't come. Further down, you've got the next low here at about 5.8%. So that's the sort of thing that we can look at when it comes to Bitcoin as well. We've got the low in here at 24,750. We've seen higher lows form. We're seeing the price start to edge higher and higher as well. So this next low is going to be very, very significant to the overall structure here. So let's have a look at where this low could come in. And, we love to use the 50% levels because that gives us a very clear idea of a good price range here. So the 50% level is at 28,300. It hasn't changed because the top has remained at 31,800 and the bottom's remained at 24,750. So even if we do get any sort of sharp moves to the downside, this is still all within context of the overall move. And remember what we have looked at on the macro. That's a very, very short term. That's the daily stuff. So I wouldn't even fret over a few percent move to a 28,003. It's something that we've already looked at, especially when we look at any sort of pullbacks after significant moves that we've obviously covered here on the channel. Now, one of the other levels was 28,800, which is currently where we are sitting dead on in this current low, 28,850. And this level has held the market up previously in March, quickly burst out, came back under. So around that mid-level of 28 has been key support and resistance over Bitcoin's history of the last 3 or so years, 2.5, 3 years. Remember, that was the lows in January of 2021 when the market really started to take off. It was also the lows when the market crashed in May, June, and into July as well. So it's pretty key price ranges there. It doesn't matter if we just get a little wick down and little moves and then start to consolidate above. That's a good thing. What we don't want to see is the market start to consolidate under these levels, because then that could lead to a test of 24,750. So overall, bullish. The macro is bullish. The cycle low is in. The significant low here in March is in. This one is still questionable in June because we haven't broken past 32,000 yet. Once we get the break past 32 and some closes above there, this one will be safe. But until then, these two are relatively safe because of how that structure is set up. You can't get any dips like this and then a bounce out. If we're to get those moves, that would crush the structure and the market would have to be down for a long time. I know I see those often, maybe you do as well on Twitter, where people draw these things saying that no one's ready for this. No one's ready for it because it doesn't happen. It's not a pattern that plays out. So take those patterns somewhere else. It's absolute nonsense for attention. So the next level I want to have a look at is where we're currently getting rejected at, 32K. So we're sitting in this range of basically what I called it previously on a tweet is it's basically like Bitcoin trying to cross the river of about 28K to 32K. There's been a fair bit of consolidation here on the way down, and then the breakthrough, it held up the market and then eventually broke down. And this time, it's really trying to consolidate in these levels before we can break back above $32,000, which would really shove yet another nail in the coffin of the bears if they aren't already all dead. There's just more and more evidence to that side. And so that would then lead to that push out to the upside, which I just showed you on the S&P. So notice the similarities here where you're starting to get these tops coming in, some higher lows forming, tops coming in, some higher lows forming, and it's going to be a little bit more varied here on Bitcoin because there's more volatility, of course, and then the pattern basically pushes to the upside. Do we get that nice big move? Let's hope. If not, as long as we keep breaking and continuing to put in higher and higher lows, like we saw in 2016, where the market broke out, consolidated, broke out, consolidated, broke out, consolidated, and it's just on and on and on. Meanwhile, everyone's sort of hoping for lower and lower prices. Now, one really interesting thing about 32K, if I get rid of this, the market only closed below $32,000 once in 2021. You can see it broke above in December of 2020. And then this close here was 32,288. And it was only the close in July, 12th of July here, that week starting 12th of July, that was at 31,788. And until that time, there was no other closes below $32,000. So it's a pretty significant level for the market to break through from this point. And you can see it happened on the 9th of May. That was the breakdown, finally closed under 32 again. That was on the collapse of, I believe that was the Luna UST thing going on there. And then this was the CeFi collapse, and that basically ended the market with FTX doing the smaller dump. So we had the rejection and then the collapse from there. So 32 is really coming up as a pretty significant level. There are so many significant levels because of how this market has been structured on the way down and then of course on the way up. You can see the 50% level here with the monthly swings is also at 31,850. There's your 50% level, and it is dead on the 50% level. It got rejected dead on. Now, if this is able to hold up here and then break through, that is going to be phenomenal for Bitcoin because it would put Bitcoin back in the strong half of a macro 50% level. The monthly swings here. This was the 2022 Miami Bitcoin conference. Everyone was going nuts thinking the market was going to go back up, but of course this was a lower top forming and the collapse. So it's a very key level there, 50%, 32, very key levels. And if we do get this continued grind, like the S&P, eventually takes time, possibly weeks to months, and then possibly we get a nice strong move out of these areas, just like what has happened in the past, like you can see back here as well. It's a pretty typical signal, and a lot of investors get caught up with this, hoping for lower prices. You might know someone who's hoping for $20,000 Bitcoin or a 15K, whatever they're hoping for. That's more than likely never going to come. And the lows get bought up higher and higher. And then eventually we get the pop because all the supply is taken off the market. Now I want to show you that on the NASDAQ as well. You can see very similar signs here. It had rejections and then a breakout and then a test on top of that. So maybe that's another option there. A breakout and a test, and then we go on a ride. That's always a typical pattern as well. And then that's just gone absolutely bananas within several percent of the all-time high as well. So these are all getting towards their all-time highs. The Dow Jones, something that a lot of people don't pay attention to anymore, but is really, really important, especially for cycle lows that we've called here on the channel. You can go back and check these videos out. I know you've seen it before. We were looking at June, we were looking at October and the high low in March, all in real time, not in hindsight. We were looking at these and waiting for them to be the lows for the market based on cycle analysis that we've done before. Remember, this is your home of macro cycle analysis. That's what we do full time. So if you want to learn more, go to the links in the top of the video description, join our free Investor Alpha report here. It's crypto and economic report. And I've also got this one here, which I'll mention to you soon. It's an $8 million prize pool coming up for some trading. But just to finish this off with the Dow Jones, it is only a few percent away from a new all-time high. 36,832 down to where we are at 3.8%. And at the peak yesterday, it was at 2.7% from a new all-time high. These markets are not going to crash to new lows. They're in bull markets now, and it's just a matter of time until they continue to break out. Check the pattern again. Tops, you're seeing pullbacks, smaller pullbacks, breakout. Happens time and time again. It's a real psychological thing that investors just, for whatever reason, don't pay attention to. Here's your move, 50% test, market's getting ready to break again. Check out the other 50% levels here if you want to learn how to use these. As I said, link in the top of the video description. 50%, it broke out, test, little time here under, broke out again, test, and away she goes. So some really key macro signals that these markets are just, in some cases, buying time to break out again. And that's obviously going to be favorable for Bitcoin as well. Just needs some more time to assess and ascertain where this next low is coming in for BTC, possibly somewhere around that $28-ish thousand. Let's see where we get these higher lows form. Fingers crossed, of course. I've got plenty of data to go through with you, especially in breadths as well, which I might just make mention here at the end because there's been a lot of talk about breadth, meaning only a few stocks are pulling up the stock market. So I think it's just a quick mention here. That is now crushed. That ridiculous narrative of the breadth, go and take it out and, I don't know, throw it in the bin, go use it as toilet paper. It's just another ridiculous narrative that takes people's attention away from what's going on in the markets. We can see here, we can remove the narrow market breadth wall of worry from our list of concerns. I'm going to put that on Twitter as well. So go follow on Twitter. I've got a full list of wall of worry narratives that have come up over the last year and a half, 2 years. So basically 90% for all four sectors. All four of these sectors now are above their 50-day moving average. And typically when this happens, we see pretty decent gains. So out of these periods, 75%, 3 out of 4 times, the max gain has been 15% within 12 months time. So another 15% from that point. There's another one here talking about the same sort of thing. We can see these big jumps in risk appetite are a great sign for the broader market. So stocks have been going up there. It happens time and time again. Most miss out. I hope I've done enough to explain that. Sorry about the dragging on. Getting a little bit better. I'll be traveling over the weekend, so I'll be back sometime early next week from Europe this time. Otherwise, hit the like and subscribe. I'll see you back at the next videos. Otherwise, go and check out the previous videos. Tons of content there about the macro cycles and how we got to this point so that you know how to pick bottoms and tops. Majority of people say it can't be done. Majority of people don't put the time in to learn how it is done. So links in the top of the video description there, guys. And should mention $8 million in prize pools. It's that time again for the World Series of Trading. This is what our traders are doing. Link there, use that one there. It's with Bybit as well. And you can go into the running to win this. So if you're trading, there's even more incentive to be trading there, right there, top of the video description. All right, guys, thanks once again. Like and subscribe. Till the next time, peace out.